Hello and greetings everyone. I hope everybody's having a fantastic day today. There's still a great run in anticipation of the ETFs approvals, and as we are closing in on the last day, the last 24 hours that the world is anticipating for the first ETFs to be approved, we already can see how the fear and greed index has improved from 68 yesterday to 74. So the market is getting greedier and greedier. The market is up 2.25%. Bitcoin is gaining more and more dominance, almost at 54% dominance over the entire market. If we look at since June, Blackrock decided to put in its application for Bitcoin spot ETFs. It was at 25,000. Currently, as you see, if we look at the 1 year chart, it's up at 46, closing in on 47,000, and it's still running. It's obvious that the anticipation of the Bitcoin spot ETFs have caused the market to rally and put the entire crypto space into a frenzy. With that said, the ETF issuers are literally in a war for you ahead of the approval. They're literally fighting for your attention, fighting for your business, because they understand, after all, it's retail that sets the tone. It's retail that moves the market, and they need retail more than we need them, because the past 15 years we've been going through this bull run cycle without institutions, and we've been doing extremely well. So always keep this in mind, that all this noise surrounding us right now, try to keep a level head and ask yourself this question. Yes, with the approval of the ETFs, it will flush in billions of fresh liquidity into the cryptocurrency space. And yes, this will mean that Blackrock, the world's largest asset manager, in partnership with Coinbase, this will signal a growing mainstream acceptance in cryptocurrencies. And Blackrock's involvement also brings a lot of credibility. Of course, it will be the first ever institutional bull run. All these aspects are great. But now ask yourself this question. Are you willing to sacrifice decentralization and the fundamentals of what Bitcoin was supposed to represent in the first place for all of that? Let me help you to answer those questions. And let's start with what Bitcoin is, what decentralization really means, what the industry will look like post approval of the ETFs, and then answer yourself these questions. Let's start with what is Bitcoin. With Bitcoin, holders can buy, sell, and exchange goods or services without a central authority or bank as an intermediary. Satoshi Nakamoto stated that the purpose of Bitcoin is an electronic payment system that is based on cryptographic proof instead of trust, and that the transactions are made by digitally exchanging anonymously heavily encrypted hash codes across peer-to-peer networks. No middlemen. Let's go a step further and look at the 5 core features that make Bitcoin a unique asset class. The cryptocurrency has finally attracted the recognition of being a unique asset class. Although this is a well-cemented fact for those in the space since Bitcoin's early inception, this digital token is strikingly different from traditional asset classes such as real estate, stock, and even gold. Now let's look at these features. The first feature is decentralization. The decentralized Bitcoin network is a core feature that makes Bitcoin unique. Next, censorship resistant. One of Bitcoin's most criticized and valued unique feature is that transactions are anonymous. The only available information, which is also available to anyone with an internet connection, is the wallet address of the initiating address and where it's intended to go. The address is completely anonymous and requires a private key known only to the owner of the wallet. Another one, hard cap, of course, 21 million. Immutable, meaning that makes the network reliable and trustworthy. It sets apart from all other asset classes where a lack of transparency, forgery, and corruption could pose a risk to the investor. And then finally, the network effects. Over the last 15 years now, Bitcoin gradually became mainstream asset. It's the popularity of Bitcoin that makes it more valuable. The fact that Bitcoin is considered a legitimate store of value and used by many people gives it more liquidity and acceptability than most other traditional assets. Let's look at an overview that sets Bitcoin apart from 2 mainstream asset classes, which is gold and fiat. And let's lay emphasis on the final 5 here. Scarcity, censorship resistant, unforgeable, openly programmable, so open source, and decentralized. Now, the bottom line here is that Bitcoin's network effect, immutability, censorship resistance, capped supply, and decentralization are what makes it unique and sets it apart as a unique asset class. This is the argument for Bitcoin, why it makes it so unique compared to other asset classes. Now, with the ETFs coming in though, and all the hype and all the noise, let's try to think rational right now. What are the pros and cons of crypto ETFs? So the obvious ones obviously is many investors are interested in holding Bitcoin and ETH and other cryptocurrencies. However, investing in crypto is complex for people who are unfamiliar with the technology. To ease the process of investing in crypto, fund managers have been offering crypto exchange traded funds, or better known as ETFs. These enable everyday investors the chance to get into crypto through their normal brokerage accounts without having to buy and store the digital tokens themselves. So an ETF doesn't require you to own any cryptocurrency, store keys safely, or move the keys back and forth between different types of storage. You own shares of the fund, which doesn't own the cryptocurrency either, but derivatives based on crypto price moves. So some are the pros. The complexity of buying and holding crypto directly means that many investors either can't be bothered or won't have the technical knowledge required. Crypto ETFs open investments in cryptocurrency to a wider range of investors. Great. Now let's look at the cons. What are the drawbacks? The fees, because investing in a crypto ETF is likely to be more expensive than buying cryptocurrency directly. When buying crypto, you only need to make a one-time payment to the exchange. When investing in an ETF, you pay your brokerage trading fees and the fund's expense ratio. So you buy Bitcoin at a premium. What's the other one? Lack of ownership. Investing in a crypto ETF means not owning the crypto directly. And then finally, no 24/7 trading. You are more limited when you can trade crypto ETFs. Typically, you can only buy and sell ETFs during normal market hours. Crypto exchanges, however, often run 24/7. So the drawbacks of ETFs are fees and reduced control. Talking about losing control, let's refresh our memories about control. Let's ask ourselves, what really happened when Robinhood suspended GameStop trading? Let's find out what happened that day. Even though Robinhood users blamed the brokerage for suspending trading of GameStop stock and other securities, during the buying frenzy kickstarted by retailers, as always, it's always the retail traders, on a Reddit forum. But Robinhood may not have had any choice. Robinhood, after all, is just one player in a public security market. In this system, brokerage apps like Robinhood are only the visible tips of the iceberg. But the actual transactions and settlements remain hidden from the public. Much control remains in the hands of a single centralized custodian, namely the Depository Trust and Clearing Corporation, better known as DTCC. For those who are not familiar with DTCC and its power of being a single centralized custodian, let's refresh our memories. Spot Bitcoin ETF tickers right now are now listed on the DTCC. Yes, that same DTCC. They are the ones listing these ETFs that are waiting for the SEC approval. And two prominent applicants, WisdomTree and VanEck, the ETFs have been already successfully listed on the DTCC. So keep in mind, this means it's in the hands of a single centralized custodian. And if I might remind you, Bitcoin's creator stated the purpose of Bitcoin as an electronic system that is based on cryptographic proof instead of trust. And its purpose is also that Bitcoin holders can buy, sell, exchange goods and services without a central authority or bank as an intermediary. So this goes completely against the fundamentals and the whole narrative of a blockchain technology and cryptocurrency, and especially of the Bitcoin founders' philosophy. As it's summarized here at the bottom, Bitcoin's network effect, immutability, censorship, resistance, capped supply, and decentralization are what makes it unique and sets it apart as a unique asset class. So this puts it in jeopardy of losing its purpose and what sets it apart as an asset class. Let's continue. So of course, Blackrock, like we said, and a dozen other ETF applicants will be listed in the clearinghouse DTCC, which controls and has its hands single-handedly as a centralized custodian, and was the power behind the suspension of GameStop trading. This gets even more interesting now because BlackRock named JPMorgan as authorized participant for their spot Bitcoin ETF, despite Jamie Dimon wanted to ban crypto. Important is to now understand what is an authorized participant. So an authorized participant is someone with significant buying power, since it is the authorized participant's job to acquire all the securities Let's make more sense out of this. So an authorized participant is an organization that has the right to create and redeem shares of an exchange-traded fund, ETF. They provide a large portion of the liquidity in the ETF market by obtaining the underlying asset required to create the shares of an ETF, and the underlying asset obviously is Bitcoin. When there is a shortage of ETF shares in the market, authorized participants create more. Conversely, authorized participants will reduce ETF shares in circulation when the price of the ETF is lower than the price of the underlying shares. So they're in full control of the liquidity and of the flow of the underlying asset, which is Bitcoin. So here is a graph that will make more sense out of it. So here to the left in the dark blue is, for example, Blackrock, the ETF issuers. In the middle in orange is the authorized participant, JPMorgan. And then in green are the shares and the stock exchange. And in blue, light blue here are the individuals. So you see that the main actor and the main player here is the AP, the authorized participant, aka JPMorgan. They're the ones who get an order from the issuers, from BlackRock. They then go and purchase Bitcoin on their behalf because asset managers are not legally allowed to purchase the Bitcoin directly. This is why they have to always appoint an authorized participant. In this case, JPMorgan. What does this tell us? It tells us that it's the APs that have the full control over this. So they're the powerful ones in disguise. So BlackRock, they're the poster childs. But actually the one who really runs the show is JPMorgan in the background, because they're the ones authorized to purchase Bitcoin. And they're the ones who are in control of the purchasing and the liquidity of Bitcoin in the ETF market. Now, let's look at what JPMorgan does and who Jamie Dimon is. Like we just said here, this is an individual who just 3 weeks ago in front of Congress said that Bitcoin and cryptocurrency are for criminals, drug traffickers, and money launderers. This is the CEO of JPMorgan that was named authorized participant. This is the same individual who is the CEO of JPMorgan that banned crypto payments in the UK. Let's look at this. JPMorgan Chase UK put out a notice to customers saying it will no longer allow its customers to purchase cryptocurrencies using its debit cards or through bank transfers. The bank cited concerns over the risk of fraud to its customers from cryptocurrencies, citing data showing that fraud related to digital currencies has been on the rise. Other British lenders have taken similar steps to bar crypto transactions, citing risk of fraud. Examples include NatWest, which placed limits on the amount of cash that can be sent to crypto exchanges, and HSBC, which banned crypto purchases altogether. Now, if we go back and look at the purpose, what Bitcoin was meant to be again, it was meant that Bitcoin's holders can buy, sell, and exchange goods and services without central authorities or a bank as an intermediary. Satoshi Nakamoto himself, Bitcoin's creator, stated the purpose of Bitcoin is an electronic payment system that is based on cryptographic proof instead of trust. And the features that really set Bitcoin apart is, as an asset class, is that it's its network effects, immutability, censorship resistance, capped supply, and decentralization are what makes it unique and sets it apart as a unique asset class. Well, all this is in jeopardy right now. All this is in question right now. What we've just heard, what we've just seen is complete censorship. We lose complete control over our assets. With these ETFs, doesn't require you to own any cryptocurrency, store keys safely, or move the keys back and forth between different types of storage. You own shares of the fund, which doesn't own any cryptocurrency either, but derivatives based on crypto price moves. So two things are happening. You lose full control and the purpose of what cryptocurrency was supposed to be in the first place. And the powers behind the suspension of GameStop trading and the powers behind crypto banning, giving customers a notice saying it will no longer allow its customers to purchase cryptocurrencies using its debit cards and through banks transfers. All this control remains in the hands of a single centralized custodian, DTCC and JPMorgan, who are the authorized participants and who literally control the in and outflow and the liquidity of these ETFs, who is literally the centerpiece of all ETF transactions. So again, ask yourself these questions. Yes, we will receive billions of fresh liquidity into the market. Yes, the world's largest asset manager, in partnership with soon to be the world's largest Bitcoin custodian. This will signal growing mainstream acceptance in cryptocurrencies. And yes, BlackRock's involvement will bring credibility. Yes, this will give us the first ever institutional bull run, but we are losing on the core fundamentals and the purpose, the reason why Bitcoin was developed in the first place, what decentralization was meant to be in the first place. We are giving all that away. That's the trade-off. With this said, we need to understand decentralization needs to step up. We need to be more efficient, especially in solving the three main challenges in the space, which is inflation, lack of liquidity, and inefficiently using the volume that is in the market. Those are the key features that need to be addressed. With that said, I want to close with this one. On this day today, January 9th, 17 years ago, 2007, the iPhone was unveiled by Steve Jobs. His aim was to reinvent the phone industry. And I love what he's quoting here. I skate to where the puck is going to be, not where it has been. Meaning, you need to be forward thinking. Think ahead of your time. This is the whole idea. Let's read even further. Of course, iPhone wasn't a flop. Apple went on that same year and sold 1.4 million iPhones in its first year. Today, it's estimated it's selling the same amount of iPhones every 2 days. Not only that, the iPhone also opened up an app economy. Here are a few things that didn't exist before it's launched. You'll be amazed. The App Store, Airbnb, Instagram, Snapchat, Uber, Pinterest, WhatsApp, WeChat. So this is a whole new economy that came out of one invention, one innovator who wanted to disrupt the phone industry and reinvent it. Apple had free rule to express themselves and to achieve that goal. And 17 years later, they're dominating the industry by far. Why am I sharing this with you today? It's because this new technology, this new industry is in danger of not being able to fully develop itself and achieve its full potential. If we don't go back to the core fundamentals, we won't be able to really achieve our full potential and the purpose of the digital ledger technology in the first place. This is why I stress that community-driven projects will dominate, because the retailers will realize this situation and we will fall back to our fundamentals and go back to decentralization and go back to community tokens, just like Bitcoin once was before Wall Street came in. As we highlighted in this video, you see how they're putting pieces in place to really take control and to be able to censor, limit Bitcoin. With this said, community, I just want us to understand that yes, we have billions of dollars in liquidity coming into the space. BlackRock's involvement will bring us a lot of credibility, of course. Mainstream acceptance of cryptocurrencies will be extremely good for us, but let's not be fooled. We as retailers, we as a crypto community, we still wield more power than institutions, and we need to really pay attention and go back to the fundamentals of decentralization. And again, decentralized community-driven projects will succeed once more. What's needed are strong fundamentals that tackle those three key challenges in the space: lack of liquidity, inflation, and inefficient use of the volume. And this is where our ecosystem comes in, because it tackles all that. Keep in mind, if we want to achieve greatness out of this new digital ledger technology, a whole new economy that has not even flourished yet, this is just the tip of the iceberg. So there's still so much to be built, and we can't dim the lights and the innovation. We have to go back to our fundamentals of being decentralized. Fully decentralized community-driven tokens will play a major role in this bull run. And moving forward, those who really believe in true decentralization and the core values of Bitcoin and what it represents will get back to decentralization and get back to community-driven projects, which will dominate only if they have strong fundamentals and they're addressing the liquidity crisis, inflation, and they use the volume efficiently. With this said, community, I want to wish everybody a wonderful rest of the day. I hope this video was informational, educational, and inspirational to you all. And I want to wish you a wonderful rest of your day, and let's keep in touch.